This is Alan Farley from FX Empire. Uber Technologies reports earnings next week on Wednesday, May the 5th. Looking back, the stock came public in the mid-40s back in May 2019, reached a peak at around 47 a couple months later, and then entered this two-legged decline down to an all-time low during the pandemic sell-off in March 2020. It got down into the low teens. It recovered also in a two-legged advance. Here's a 1, 2, and here's a second rally into November, returning to the prior high and breaking out, entering this uptrend, which at least to this point was looking pretty healthy, but then took this real steep, deep dip down in January, and then one big new high in February, and then eased into the symmetrical triangle pattern. Now, symmetrical triangles and new highs are considered to be bullish, so they're considered to be a continuation pattern. So we're looking for this thing to resolve into the 60s and 70s, and for the stock to head perhaps as high as $80. Now, of course, that isn't a sure thing. We have earnings coming up next week, and the company's still reporting quarterly losses. It does say that it expects to be profitable by the end of the year. So all we can really do at this point, most at least conservative traders and investors, just wait it out to see which side wins, with a rally above around 61.50, setting off buy signals, while a sell-off through about 54.50 sets off sell signals. Now, if we do get a sell signal, expect the stock to drop all the way back to this new support line right here in the 40s and test the 200-day moving average, which for some swing traders might be a more advantageous entry. It's just no guarantee that we're going to get that low.